I think that's like the fundamentals of the China banks are kind of under pressure, and I think that should be expected. The BOC reported like 1% year-on-year decline in its first half result, and I think that will be more or less similar for the other three names. Like I think Big Four overall should report 1 to 3% year-on-year decline in their first half result. But at the same time, as you mentioned, the Big Four names has already accumulated quite a lot of gains year to date, outperformed the market. So I think that the share price might see some volatilities here. Despite that, the weak fundamentals should be expected by most of the investors in the market. But at the same time, we also see some marginal improvement signs. For example, I think the NIM's net interest margin was actually better, like the NIM trend was better than expected. We see that Bank of China was seeing a flattish Q-on-Q NIM at 1.44%, and BOCHK also reported Q-on-Q flattish NIM despite of a weak HIBOR in the second quarter. And ICBC also reported an Q-on-Q expansion margin in first quarter, and I think in second quarter also kind of stabilizing NIM, helped by the lowering funding cost. But nevertheless, we still see some growth pressure in the second half. The NIM may still face with some downward pressure because of the LPR cut in the first half will gradually roll over into the second half. So I think they will continue to face with earnings pressure in FY24 and even in FY25. Yeah.
What kind of pressure would the property crisis be imposing on the mainland banks? Of course, we continue to monitor any change in the quality of its assets. China is still embroiled in their property crisis, and all the mainland banks have exposure to this.
Yeah, but okay, so the property sector remains a key concern of the credit risk of China banks, of course. But the good sign is that we do see for the banks which have already reported their interim results, for example, BOC, we are already seeing declining NPL ratio for the property sector. For example, BOC from above 5% by the end of last year to 4-point-something% by the end of June this year. That's a good sign, indicating some marginal improvement. And at the same time, we do see that the exposure to the China property sector was declining for most of the banks. For example, it's around 5 to 8% of developed loan on their loan book. So not that large exposure now for China banks. But again, we have to be concerned on the mortgage side, which is also closely related to the property market performance.